Welcome to the Personal CFO. Today I want to talk about an important question. And that question is, when we're looking at investments, does the price we pay impact the future returns that we get? Now, I think at first glance, it seems obvious that it might. However, the news that's been happening and when you've been seeing what's been going on lately in the stock market, you might be thinking maybe it doesn't matter as much because people seem to be doing okay just buying pretty crazy stuff, for lack of a better word. But so what I want to talk about is, although we may not necessarily be participating in what you see in the news with Robinhood investing and purchasing GameStop or whatever's happening, as long-term investors, what are the implications for us and what can we take away? So again, going back, does the price we pay impact our future returns? Well, let's look at a couple of charts. The first chart I want to show you is you see a bunch of kind of random scattered dots. The vertical line, so the higher it goes, it means the higher rate of return that you got, and the further over to the right means the more that you paid for an investment. And as you see, there's not a real pattern here, right? You can pay a lot, which means over to the right. You can pay a little over to the left, and your future rates of returns or the rate of return that you get for the following year is kind of everywhere. So it's pretty random. And what that tells us is, as long-term investors, the price that we pay doesn't really tell us a whole lot about the expected rate of return over a one-year period. And what I'll tell you is 1 year is just not that long-term. But what happens if we go from 1 year to 5 years? What we see is all those dots start to come in, and they go from everywhere to in a pretty tight band. And what does that band tell us? Well, as it shifts down and to the right, what that means is the rate of return you can expect from your investments goes down the more that you pay. And this is referencing price to earnings ratio, which means what are you willing to pay for $1 of earnings in the company, which that's not as important as the moral here, which is that down and to the right means the more you pay, the lower your rate of return has been over the next 5 years, which is a longer time horizon than 1 year. So there's plenty of noise about what's going on day to day in the market. We don't really participate in it. It's really interesting entertainment. But as long-term investors, and by long-term I don't mean a year, I mean longer, the price you pay matters. Paying more for an investment means a lower potential expected rate of return. I hope this was helpful. Thanks for investing your time at the Personal CFO.